Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because it finally happened. Over the past 2 weeks, we've seen a strong increase in global liquidity, which is great news for our risk assets like stocks and Bitcoin. Now, I'm excited for this video because I think it's going to save investors a lot of money because we've seen the exact same thing happen the past 3 times global liquidity has bottomed. And what we've seen each and every time going all the way back to the end of the bear market and start of the bull market, we would see global liquidity bottom, rally for a couple of weeks while Bitcoin does nothing. Then, after a while, with about a 2 month lag, Bitcoin starts playing catch up. Same thing towards the end of 2023, global liquidity finally bottoms and starts rallying. Bitcoin also followed it a bit here because of all the excitement surrounding the spot ETFs, which looked like they were going to be going live soon. But eventually, Bitcoin stalled out and started chopping around until finally following global liquidity about 2 to 3 months after it bottomed. And once again, the same thing happened last year. Global liquidity bottomed around early July and Bitcoin just chopped around and did nothing for about 2 months. And eventually it rallied and caught up to global liquidity. Now, there can always be white swan events like the ETFs going live or like a pro Bitcoin president winning the election that can cause Bitcoin to diverge from global liquidity briefly. But this seems to be the same macro driver for Bitcoin, and we've watched it go down for the past few months. Eventually, that caused Bitcoin to stall out, but now that we're seeing early signs of a recovery, it means the most likely scenario is Bitcoin does a bit more chopping and then eventually follows it higher. Now, there could be a white swan catalyst that makes us rally earlier than that, but if we were to follow the playbook from the last 3 times this has happened, it would tell us that it's more likely we're going to see a bit more chop and consolidation before Bitcoin's next rally. This also aligns perfectly with pre and post inauguration seasonality. Usually the S&P 500 rallies into inaugurations, which if we take a look at what happened this time around, there is the election on November 5th. Bitcoin and the S&P 500 both had a huge rally. And then after the inauguration, usually around January 20th, we see about 2 to 2.5 months of chop before risk assets like the S&P 500 end up rallying higher. And we know that Bitcoin is quite correlated to the S&P 500 because it's a risk asset a little bit further out on the risk curve. So we need the S&P 500 to be doing well for Bitcoin to really have those huge rallies higher, especially now that we have those spot ETFs that traditional investors are buying in the same brokerage accounts where they hold the S&P 500. But this inauguration seasonality aligns very nicely with what we're seeing with global liquidity, where we can expect another 1 month, maybe 1.5 months max of chop and consolidation. Everybody is going to be complaining that Bitcoin isn't rallying higher, even with all of the bullish announcements from Trump and what's happening with ETFs, treasuries, MicroStrategy buying. But by the time all of those people finally give up hope and capitulate, that's when this chart says that risk assets should start rallying about a month from now. And this is exactly why I called Monday's free weekly report Navigating the Storm, because all we have to do is survive the chop and volatility and not make any emotional mistakes or decisions and wait for Bitcoin's next move higher. For global liquidity to maintain its downtrend, ideally we would like to see the US dollar index keep going down. A lot of that is going to rely really heavily on what we hear from the Fed next week on the 29th of January. The market is still pricing in only one Fed rate cut over the next 12 months. I still believe that's way too low, and I do feel as though the market has reached peak hawkishness, so I only think we're going to see more rate cuts priced in over the next few months, which should put more downward pressure on the US dollar index and more upward pressure on global liquidity. But again, all we have to do is survive until that actually happens. The unemployment rate has been quite low recently, and that's not giving the Fed an excuse to cut rates sooner, but we'll continue to monitor how that changes over the upcoming weeks and months. Similar situation with inflation. It's somewhat going in the right direction after the last reading, but it's still quite a bit higher than it needs to be for the Fed to start cutting rates more aggressively. So those are the two main things we're going to watch because they're going to have the biggest impact on the Fed's tone and on the dollar index. which as a result should impact global liquidity. But this bounce we've seen recently as a result of the dollar index selling off is a great sign. So for now, the expectation is more chop in our current range until at least the FOMC meeting coming up next week. Last time we chopped around for this long was in October 2023 before we had that huge breakout that we spoke about after about November, where Bitcoin finally started playing catch up to the rally we'd seen in global liquidity. Don't know if we're going to see a 40% rally again, maybe something a little bit smaller because of how much larger Bitcoin is now in terms of market cap compared to when we were at 30K, but still optimistic because we tend to see these Bitcoin breakouts after everybody gets chopped up during the consolidation. And I would just try to ignore all of the short-term noise and arguing over what's going to happen over the next week on whether Bitcoin should rally because Trump is announcing some type of strategic reserve and they're not going to be buying billions of dollars of Bitcoin, but they're not going to be selling the Bitcoin they already hold, or technical analysts saying that there's a diamond pattern that's going to send us to 96K. So should we short the market and try to take advantage? Should we sell so we could buy back lower? All of those short-term decisions are just great ways to miss the bigger picture and mess up your performance over the next few months. So I would try to ignore the short-term speculation and instead try to focus on the big picture, which is that with an increase in global liquidity and all the bullish regulatory backdrops we're seeing, it's likely the next few months are going to be great. So for me, base case is still slowly grinding higher over time. Maybe there's some chops along the way before that happens, but I'm not expecting any huge drops or huge shakeouts before our next move higher. And looking forward, it's very hard to not be optimistic on the space. The SEC officially canceled the SAB 121 accounting rules, so financial firms are finally able to realistically hold crypto. We also have the CEO of the largest asset manager in the world holding over $10 trillion in assets under management calling for Bitcoin 700K price targets amid currency debasement fears. And that price target is definitely not something I'm relying on in the short to medium term, but it still gives a lot of institutional investors the backdrop they need to allocate to the space when it's being marketed by these influential people like the BlackRock CEO Larry Fink or the CEO of Goldman Sachs saying that Bitcoin is not a threat to the US dollar and is an interesting speculative asset. We also still have so many companies following the MicroStrategy playbook and buying some Bitcoin and adding it to their balance sheet. We're still seeing US states allocating some Bitcoin to their retirement funds and straight treasuries. Kansas was the most recent one to make an announcement along those lines. And spot ETFs are still slowly accumulating and taking Bitcoin off the market. Now, this doesn't mean that price has to double tomorrow like many people would hope, but it does mean that the future looks bright and that Bitcoin likely continues to slowly grind higher over the longer term. As for my base case for this cycle, I'm still expecting a top around late Q1, early Q2. So that's about the late March to mid-April timeframe. Happy to change my mind depending on the price action over the next month or two, but I'm still optimistic that the cycle high isn't in yet, even though I'm seeing so many people calling for it. And for now, I really don't see any major worrying signs as long as Bitcoin is closing weekly candles above 100K. These wicks to the upside aren't great, and they do show that sellers are starting to step in at these prices. But until we close below 100K and deviate back into our range, I don't see any major worrying signs as of right now. And if anything, this just feels like a healthy sentiment reset after the crazy excitement we saw post-election last year around the November, early December timeframe. As for my portfolio, haven't made any changes since my last update, still holding the three majors, Bitcoin, Ethereum, and Solana. And the main reason I do this, I know I could potentially perform better by picking the right smaller assets, but then I would have to be stressed about upcoming corrections and is my meme coin gonna drop 80% before Bitcoin's next rally higher? And this is something that isn't discussed enough because all you see posted on Twitter and YouTube are people winning and making money in meme coins, but both experienced and new traders and investors alike are losing millions and millions of dollars on these meme coins because even if they buy it during a rally, they just expect it to keep going higher and higher because they're being told that it's a blue chip meme coin, whatever that means. I don't know how something like a meme coin with no intrinsic value can even be considered a blue chip, but that's a term I saw thrown around a lot over the past few months, and it's cost investors a lot of money. So for now, what I want to promote on this channel and what I want to focus on for myself is the much lower stress approach of holding the big three, which I think is a great marketing term for Bitcoin, Ethereum, and Solana. I don't know if Kathy Wood is the one who came up with it or the first one to say it, but I do think that's a great term for investors that want to get some exposure to the space, but don't want to get caught up in speculative gambling on new launches and tiny meme coins and other projects. So as we look forward, I think we've already seen enough of a correction with our dip below 90K and Bitcoin hitting our likely region, but I'm still open to the possibility of mid 80,000s or low 80,000s if we do get some type of a surprise because of the FOMC meeting or some other macro announcement. That's also where we still have a open CME gap. These tend to get filled, but sometimes they get filled in the following bear market. So I do think there's a high likelihood that eventually Bitcoin will see those prices once again. I just don't know whether it happens in the bear market or happens before our next rally higher, but it is a nice confluence with our possible region. And I still haven't updated this chart, but it's still a great visualization for myself on whether or not I'm interested in buying Bitcoin at these prices. Even if we go to 120K or 140K this year, the downside risk makes it quite hard to buy at these prices for myself, especially because my cost basis is way lower. So for now, I'd rather just sit on my existing positions and take small profits along the way. And speaking of existing positions, not the best price action from Solana this week. We saw one deviation above our 2021 and 2024 all-time highs with a close back below. Similar thing this week once again. We tried to get above 260, but deviated back below that level once again. Now, if Bitcoin is able to do okay, it likely takes Solana up with it. Solana has a really good backdrop. It's already broken into price discovery, which is something that not many altcoins, including Ethereum, have done yet. And we saw a lot of usage and new addresses being created thanks to all of the craze around Trump's meme coin launch. We're still seeing rumors that the CME is going to launch XRP and Solana futures, which historically has been the first step to a spot ETF being launched. Trump has also promised to make the US the capital of AI and crypto, which is a great backdrop for Solana because that's the platform he chose for his meme coin. And we also know that Trump signed an executive order to stop a CBDC from being launched in the US, which is incredibly bullish for stable coins that already exist and that are US based, like USDC. And most USDC volume is done on Solana and Ethereum. So I see stablecoin adoption as one of the main use cases for this asset class. And most of that action is done on Solana and Ethereum. Now, Tron does get a lot of usage for USDT, but I'm focusing on USDC here because I think that's going to get a lot of backing from Trump and the new administration, and most of that volume is done on Solana and on Ethereum. As for Ethereum, this has definitely been a tough one to hold, but I'm still optimistic for what comes next. Honestly, I'm now noticing that this price action we've seen recently looks almost identical to what we saw from about March to May of 2024. If you'll remember, Bitcoin was seeing a correction during that time period. Ethereum was correcting alongside it, and now Bitcoin has been correcting since about mid-December, and it's been dragging Ethereum down with it. But I'm seeing a lot of optimistic things going on for Ethereum that I think will make it perform very well over the next few months. For one, we finally have an Ethereum marketing department being funded by the Ethereum Foundation. And this is important because historically, Ethereum has kind of been a mess when it comes to narratives. Is it sound money? Is it digital oil? Is it the centralized internet? So many different narratives tend to confuse investors, and Bitcoin has been quite lucky with store of value and debasement hedge being the main narratives that stuck and keep getting repeated by people like Michael Saylor and Larry Fink, causing that narrative to strengthen. And many members of the community would have different views over what Ethereum's main narrative should be, but I think this marketing firm being launched to help market Ethereum should help find that cohesion. And speaking of Ethereum marketing, the BlackRock CEO Larry Fink, once again, who, yes, same person who's calling for a 700K Bitcoin, and same person who's the CEO of the largest asset manager in the world, he wants the SEC to rapidly approve tokenization of bonds and stocks. And guess what platform this is going to happen on as of right now? Ethereum. And the other crucial marketing arm for Ethereum is Trump and World Liberty Financial, because recently they've been buying Ethereum and now hold close to $200 million worth. Again, nothing crazy like the billions of dollars we see with Michael Saylor and MicroStrategy, but still an optimistic bullish sign for the longer term. We're also seeing whale accumulation, which does make sense. I mean, Ethereum is still trading almost 40% off of its all-time high, while Bitcoin is trading 40% above its all-time high. So it makes sense that some whales are going to be rotating some profits into Ethereum, where perhaps there's more upside possibility, one because of its smaller market cap, and also because it has lagged so far this cycle. And we're still seeing some small ETF inflows again. The staking ETF should be a huge catalyst this year, but we still don't know when that's going live. And as always, a lot of Solana and Ethereum's performance is going to rely on Bitcoin. As long as we're above 100K, everything looks good for the short term. But if we do fall back below it because of some macro uncertainty, I'm still optimistic for what the next 2 months has in store. As for traditional markets, pretty solid week for the S&P 500, still rallying. Now, perhaps with that inauguration seasonality, we could see some chop and consolidation in the short term, which would impact Bitcoin, but I still think the medium term is still quite optimistic. The federal government is still running huge deficits, even with all of the stuff being promoted by Doge and all of the reduction in spending that they keep talking about around the corner. As of right now, we're still seeing these big deficits, and all of those reductions are going to take quite a while to impact the size of these deficits. So I continue to expect exponential growth in US national debt, and eventually that's going to mean an increase in the US money supply, which is bullish for our risk assets like the S&P 500, and definitely bullish for our fixed supply risk assets like Bitcoin, especially now that Bitcoin finally has spot ETFs for easy allocation and a pro-Bitcoin US president. So we'll see what happens. We'll continue to monitor global liquidity and whether or not Bitcoin continues to follow suit. Base case as of right now is more chop in the short term, like we've seen the past 3 times global liquidity bottomed, but I'm open to alternative scenarios as well. As always, let me know what you expect. Is Bitcoin going to teleport immediately, or are we going to chop around for a while? As always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.